Welcome to Truth in Accounting. Today, Sheila Weinberg, founder and CEO, sits down with Judy Willard, communications director, to talk about a great article by Professor James Naughton. This article spells out the harm of political math, and this conversation gets to the heart of our mission, helping taxpayers understand the true cost of government and the ramifications of poor accounting standards, because right now, bad data is informing financial decisions that affect your taxes. Thanks for listening. We're glad you're here. Sheila, I am so excited to have this conversation with you today because I think we're going to dive into our number one question is, why is government accounting different than corporate accounting, right? The government makes rules for the corporate world to protect investors, yet the rules for government don't seem to be as strict. And so specifically today, we are going to talk about a series of articles that are being written by Jim Naughton. Now, Jim is an associate professor of business administration at the University of Virginia. His research examines how financial, legal, and regulatory institutions shape both financial disclosures and economic choices. So we love Jim. We've worked with Jim over the years. We're going to try to get Jim on the podcast, have him at events. We love to work with Jim because he's so brilliant in his research, and he really understands that these rules and regulations affect us, right? Because every rule and regulation that the government comes up with actually affects us. And in this series that he's written, which you can find on the Pro Market website, Sheila, one of the best things out of this first article, he talks about who is a George Stigler that came up with the phrase of every regulation benefits those who hold the regulation, right?
Well, they call it capture theory. So where the regulators are captured by the industry. So in this case, the people who set the government accounting standards, as you mentioned, they don't use the same accounting standards as the corporate world. The corporate uses what us accountants call FASB, the Financial Accounting Standards Board, and they set their standards. But the governments don't use those standards like everybody else. They have their own standards, and those are set by the Governmental Accounting Standards Board. And the interesting that the people on the members of that board are current or former government staff or outside auditors, government auditors. There is one person who is a municipal credit analyst from Standard & Poor's. But what Jim is arguing, and we buy into this too, is that this board has been captured by the government people. They're more concerned about the preparers of the financial reports versus other stakeholders, and the most important stakeholders, which are the citizens and the taxpayers. The rules seem to favor the way the governments want to report them, not necessarily the information that would be best for the citizens and their elected officials to have.
Again, this is all based on Jim's series of articles that are out in Pro Market, is the website. They're so informative in the way that this is affecting the rules and the regulations. And his point is that this is leading to a lot of fiscal distress in cities and, states, because if you're not reporting the numbers correctly, you're not going to be telling people the actual cost of their government. So then what happens when you go to the voting booth?
Professor Naughton is pointing out a good example of what Truth in Accounting calls political math. He uses a simple example of, in the real world, corporate world, if I promised you as an employee a lifetime benefit of $100 once you retire, and the math that they use, which is based upon, well, if I have to go out and buy an annuity to fund this, how much would that annuity have to be? And that is $21,500. That's the liability that you would report. A corporation report. But under political math, the math that governments use, the liability would be only $14,000. And Jim's point is that, this $14,000 is not really, economic reality. It's based on that the governments are saying that we are always going to earn 7% on our money. And Jim also points out that the liability should maybe even be higher for governments because they have no way of getting out of this liability. Most governments report, for example, Illinois, they have a constitutional guarantee for these benefits. So he thinks the liability shouldn't be lower for corporations for the pension benefits. It actually should be higher. But the governments are reporting a $7,000 less than what a corporation or you and I would report.
So, so what might happen then is when those bills come due, they're going to have to raise taxes to cover that liability.
Well, they're going to have to come up with the money somehow. So it's either raise taxes, find other revenues, or cut services and benefits elsewhere. What he's pointing out is if the government thinks that this is all part of their compensation package. A pension is part of their compensation package. So what the governments are doing is recording less of their compensation cost. Because again, if you pretend it's only $14,000, every year you have to put in less money than if it's actually $21,000. You'd have to put in more money. Now, if I have to put in more money, as you point out, what do I have to do? I have to either increase taxes or cut services and benefits. And government officials, some of them who are elected, and the elected officials control things, they don't want to raise taxes or cut government services or benefits. So instead of using reality math, they go ahead and use this political math. It reduces their current compensation cost, but it pushes all this cost into the future.
Well, that raises an interesting point because, the way you explained the political math, it was really great for me because when I was reading the beginning of Jim's article and he was talking about annuities and doing all that math, I kind of zoned out because I was like, I don't know what's going on here. But so when I got to the point where it was explained to me that the regulations are different and that they favor the regulations are favoring government to make government look like their finances are better than what they are. This goes right into what happened with the Studebaker car company and why we had the Congress get involved in pensions in the first place. So explain to our audience what ERISA is and how that's another regulatory capture that the government did not have to follow itself.
So in the 70s, the corporations had promised, like the Studebaker company, General Motors, had promised their employees benefits, but they weren't properly, they were not recording the liability at a full amount, not funding the liability, what Congress thought was proper. And so when these corporations had financial trouble, they didn't have the assets set aside. So when you promise somebody money, you should have assets to back up that promise. And the corporations didn't have enough money to back up those promises because they were not reporting their liability at an economic reality-based liability. So when all these corporations had financial troubles or even went bankrupt, there wasn't those assets that had been promised to their employees. So what Congress stepped in and said, this is bad, corporations, you really need to have those assets aside. So they passed a law called ERISA, which is the employee insurance something. But what it does is it started to require corporations to report their liability using what Jim points out is, if you promise this benefit, let's pretend that you're going to buy an annuity or have enough money set aside to actually fund those benefits when they do. So you have to report your liability on your balance sheet, which obviously, if corporations were reporting less before, it made their balance sheets not look as good.
Right.
And also they had to start funding these properly. And if they didn't fund them properly, there are rules now in place and then that require, if the funding gets below 80%, then the government steps in and says, no, you have to cut benefits or raise your contributions. You have to fix this. And so now corporations, what happened as a result of this is that corporations finally understood the real cost of these things and how much the liability was and how much it was going to cost them. And once they had to start properly funding these, corporations were like, we really can't afford these promises. They finally realized it once they had to account for them properly. Unfortunately, in the bill, there was one line that exempts state and local governments. So if you'll notice, people will notice that in the private sector and corporations, most corporations got rid of what they call their defined benefit plans. Defined benefit plan meaning, hey, I'm going to promise you this set amount, $100 for the rest of your life. I'm defining that benefit. Yeah. And they got rid of those because they realized that they couldn't afford them and the liability was too high. Governments, for some reason, they've kept these defined benefit plans. And I believe it's because they don't have to follow ERISA. And if they did, then they would understand the true cost of these plans. And then they might decide that, oh, we really can't afford these plans. We're going to have to come up with another way to compensate this. All of this crazy, and why governments are into these pension plans is because they have to compensate their employees. But governments, state and local governments, most of them have a balanced budget requirement.
Right.
And so that means that their revenues have to equal their expenses. And so what they do is so when your salaries increase, because, employees always want to get paid more. You want it like a raise. So as the salaries increase, the governments, were having to tax more or cut other spending. They wanted to keep their employees happy. So they were like, well, if we increase these salaries, then that's going to affect our balanced budget calculations. And that's going to either make us have to raise taxes or to cut other spending. But I do want to get reelected. And if I do those things, I might not get reelected. So what they came up with is, well, we will go ahead and offer these employees pensions. And those we don't have to pay in the current period. Those we can kind of push off into the future. And so what the governments did is set up all these defined benefit plans, and governments have just gotten huge on these. And it's caused this financial stress.
It's so interconnected, the regulatory environment of it, and it being captured by the people that benefit the most from it. Because what's your favorite quote from Frank Kavanaugh, former U.S. Treasury official?
Oh, I love this quote. It's that the reason that the governments have balanced budget requirements is one, so they don't go unsustainable debt. And unfortunately, because of the use of these pension schemes, governments have gone into unsustainable debt. But the most important reason is for accountability, that the citizens should be able to hold their elected officials accountable. So Frank Kavanaugh's quote is that politicians shouldn't have the pleasure of spending, i.e. I'm going to get a vote, without the pain of taxing, i.e. I'm going to lose a vote. So you keep a balanced budget requirement so your taxes equal how much you spend. And if you spend a lot, you're going to have to raise taxes, and then you might get voted out of office. But unfortunately, what the politicians do is they have circumvented these balanced budget requirements by using what we would call political math or budgeting gimmicks like these pension schemes to pretend that the budget is balanced while they're going into debt at the same time.
I want you to explain to our audience, because I've learned so much about government accounting, obviously, since working with you, being somebody who's very politically minded, learning this issue brought politics to a whole different level for me, because it showcases that this isn't a left or right issue. This is simply, how do you do, well, political math, right? Like we're seeing political math, and that's not left or right. That's just dumb. So, and it's not fair to the taxpayer. So I don't think you have to be left or right to agree that managing money properly is not a left or right issue. And I would even say to the people that might be a little bit more, you know, prone to expecting the government to solve a lot of problems, if you really care about certain issues, then you should really care about the way the government is managing the money so that, we can all lobby for the things that we think our community needs, right? And that
Well,
happens at the local level.
what happens with the political math is it takes away the citizens' ability to hold their elected officials accountable. If people listening, and I believe you believe this, and I do, is that a lot of our state and local governments, and especially our federal government, they just seem like they're out of control. And one of the reasons, and we can't hold them accountable. It's like they just spend, and they're spending money, and there doesn't seem to be any limit to the amount of money they're spending. But the reason is because they are spending more money than they're accounting for. And so, if they had to raise taxes, and I know a lot of listeners hate the idea of raising taxes, but if they had to raise taxes to cover the amount of government that people are getting, then people would be like, well, hold it. How come? Why are my taxes raising? But right now, people are actually getting more government than they're paying for. And of course, you're going to be happy if you get something for less than what you're paying for. So you're going to keep on re-electing an official. The other thing is it prevents us to be able to vote for people with the right information, and also to advocate for tax and spending policy. Because think about it, if your elected officials come out and they say, we have balanced the budget, or we're running a surplus, well, you're thinking, wow, great. Those guys are, and ladies are doing great down in our state capital. I'm going to re-elect them. But if you understood that, no, the only reason they can say that is because they're using political math, not economic reality. And if they use economic reality, they're actually running a deficit. So instead of being able to say we're running a surplus, or we're balancing the budget, they're running a deficit. Well, in the voting booth, you would make a different decision possibly. Or if you're advocating, hey, I have this program that I want to advocate for. But if you understood that, well, the government is horribly in debt, should they really be adding to the government? Or should we be getting rid of programs? Or, hey, I'm going to advocate for, a large tax increase or a large tax decrease. Well, you're not doing that based upon the right numbers. So we, at the very core of this, we're very nervous that this is hurting our representative forms of government, because citizens do not have the information they need to really decide who to vote for or what tax and spending policy to advocate for.
And I think that people we tend to get complacent about things, and we just think what has been will always be. And I think they don't believe that their city or their state could actually go bankrupt. So people don't realize that every year there are, I don't know, there's been a study done on how many communities have gone bankrupt over the last 20 years or so. But I mean, look at what happened to Detroit and Stockton, California. So there, it can happen that if you mismanage money, it's not going to work out good, and that is going to harm the taxpayers ultimately. So,
yes, and if you think of the services and benefits that, the government does provide, there are some people would say, well, I don't need this or that, but there are some that at the core, they do need. And as you pointed out earlier, by doing this bad accounting, the bad accounting results in a deferred tax increase is what it is. It's like eventually they're going to have to come up with the money to cover this.
Yeah. Yeah. Well, and then that on top of inflation, right? So like our grandkids are gonna get a Whopper at some point in time is what's gonna happen.
Right. But again, I do, there's a lot of discussion of, and the reason you have balanced budget requirements is so you don't push the current cost onto future taxpayers. But there is a harm that is causing today, which again, you just don't have the financial information you need to be knowledgeable participants in your government.
And that is very true. And having, learning what I've learned through Truth in Accounting, and I encourage our audience to go to our YouTube page and watch our video on how to read your city's annual comprehensive financial report, because that really educated me, because I recently went to a county commission meeting and I was able to show them that, look, your net position went up by $23 million in 2023. Property values were up 8%. So revenue is coming in. So why are you asking for a tax increase on, a certain part of our district? But yet their unrestricted net position is $31 million in the hole. And that's the one that includes the pension and the OPEB liabilities that they have. So, their financial report was all, like, hey, look how good we're doing because we earned $23 million more than we did last year. But they don't point to the fact that their unrestricted net position is in the hole because nobody wants to talk about that.
Yeah, just to provide some terminology to people, the governments offer pensions, which there's a lot of discussion, fortunately. Previously, when we were working on this, there wasn't that much discussion about pensions. And how underfunded those are. But the governments, again, when they were trying to come up with a compensation package that they didn't have to include all the cost in the current budget, they started to offer retiree healthcare benefits. And that's what we call OPEB, other post-employment benefits. So these retirees for state and local governments get, their healthcare paid for, their dental, their mental, their, if you want a good retiree healthcare plan, start working for go work for your government, because those exist. Now the interesting thing, and I don't know why these plans are not, more people don't focus on them, is that the pensions, a lot of people highlights how some pensions are massively underfunded. Well, the retiree healthcare benefits, governments do those on what they call a pay-as-you-go basis. So they only pay the current cost for what the current retirees are. They don't pre-fund those.
Wow.
And so these are, we think that, pensions are underfunded. Well, these are not funded at all. So, if I'm a state or a local government worker, I would not be counting on these these benefits, because the governments aren't setting any money aside. And their rationale is that, which goes again against economic reality and basic accounting, is that, well, they have the right to change these. They could get rid of those. These benefits are not, these aren't guaranteed. They're not part of the contracts, but some of them are. We can change them. So we're not going to record them as a liability, and we're not going to put money aside. Well, in Illinois, we found out that is not the case. In Illinois, the Illinois Supreme Court said that those retiree healthcare benefits are just as guaranteed as the pension benefits. So to me and you, if I found that out as a government official, then I'm like, well, we're putting money aside for these promised pensions, so we should go ahead and start putting money aside for these retiree healthcare benefits. Oh no, that didn't happen. Even though they're just as guaranteed as the pensions, the Illinois legislature and governors have not chosen to put any money aside to fund these promises.
Well, and to your point, when you said that that statement actually came from a chief actuary of the federal government, that these benefits Congress can change the laws at any time. So these benefits aren't guaranteed. So that's why they don't consider them a liability. Like that's.
So we're getting into probably in this, it's another whole podcast, Judy, on Social Security.
Okay.
The Social Security, the federal government does not record those as liabilities, even though they've been promised to everybody.
Yeah. Yeah.
They don't record these as liabilities, which we just strongly disagree. They should be recorded as liabilities because the government officials, especially the chief actuary of Social Security, has said that, well, the Congress can change these benefits at any point in time. And so we're not going to record it as a liability. These, back to the state and local governments, they're not recording these retiree healthcare benefits because they believe that they can change the law at any point in time to get rid of these. Now, again, going back to quote basic accounting, basic accounting says that you record a liability if the liability is estimatable, and we do know, we do have actuaries and they do calculate it. We do have the number. And if it's probable, not guaranteed that you're going to pay them, but probable you're going to pay them. And we would argue that if it's under current law that you're going to pay these, or the benefit structure is the way it is, has been told to employees, then it's probable that you're going to pay them. Right. So this liability should be recorded. And if by chance the government decides not to pay these in the future and they change the law, then you would reduce the liability. But right now the liability should be recorded, and they should be, for government accountability, because you want to include all of the compensation for the current workers in the current period. They should be included in your current budget calculations, and the pre-funding of those should be part of your budget calculations. So I would say that even though governments are saying they balance the budget and they're fully funding what their actuaries say should their pension plans, they're truly not balancing their budget if they're not pre-funding their retiree healthcare benefits. And most governments do not pre-fund their retiree healthcare benefits.
So that brings up I'm going to tell an embarrassing story on myself, but because I did not like math growing up, right? So anything having to do with financials or math, I didn't want to have anything to do with it. I have now realized that is a stupid way to walk through life, especially if you are interested in politics and how your government runs, because this is the foundation, right? They can't do anything without the money they take from us. So, but I remember early on sitting at a staff meeting, and you were talking about budgets and financial statements, and I said, hold on, is a budget different than a financial statement? And because I thought it was just accounting jargon, and they were, interchangeable words like, I'm going home, I'm going to go to my house, right? Like I just thought they were interchangeable. And when you schooled me on that, I was like, oh my gosh, now it makes so much sense, because the politicians only want to talk about the budget, and you hear them say, I balance the budget, I balance the budget. But when you look at the financials, you see a whole different picture. And this goes right to the heart of the regulations and the fact that they've skewed the regulations to benefit themselves. And because like the budget, I know, talk about political math, they say, I want you to tell our audience a couple of tricks they use when they so-called balance the budget. Like what's the political math they do there?
You're talking about, and we're, you're a normal citizen. The listeners are probably normal citizens. They're busy with their lives.
Right.
I'm talking about actuaries. I don't even know. I'm a CPA and I don't know how actuarial stuff works. But what the citizens do is they trust what they hear. So right. When their government says, I have balanced the budget, they're like, okay, they must have balanced the budget. And unfortunately, the news media, they think this is too hard to grasp. They don't cover it. They just believe what the governments tell them. They don't investigate, well, how was that calculated? And that's right. What we focus on is you need to look at how this is calculated. And I think it's up to the governments to calculate things accurately and report accurately to the citizens what's going on, instead of these budgeting gimmicks that they use to pretend they balance the budget when they go into the debt. So so tricks like Illinois is the most notorious and come up. They're very creative. They talk about creative accounting. Illinois is very creative with their accounting. They go ahead and part of Illinois' political math is they will borrow money. Those loan proceeds they will record as revenue.
Oh, okay. So like if I got a new credit card, I could pretend like my budget for the month is $1,500 more.
Yeah, because you just borrow money, just borrow money. So, and the way they get away with it is Illinois' balanced budget requirement says that it doesn't say what us accountants say, which is your revenues equal your expenses. It says your money available equal your expenditures. So in this case, if you borrow money and that goes into your checkbook, then that becomes money available. And notice again, I pointed out that they use the word expenditures, not expenses. So in essence, what they're doing is checkbook accounting, whatever goes into my checkbook versus whatever comes out of my checkbook. So if in Illinois in the past, if they couldn't figure out, if they didn't have enough money to balance their budget, they just stopped writing checks. Or they planned on stop writing checks. So if only your checkbook had. So if I write a check that's going to be an expenditure, I don't want, so if I get a printing bill and my budget isn't going to be balanced, then what I do is I just don't pay that bill until the next year. And then my budget can be balanced. The other thing they do is Illinois only has to balance 6 funds, the general fund, the road funds, 4 other funds.
Okay.
Well, Illinois has more than 600 budget funds.
Oh my God.
So what they would do is if for example, I pay a CPA fee that goes into the CPA fund. Well, if the CPA fund had extra money, then they would just move that over to the funds that have to be balanced. I call it, they move it from one pocket to another pocket, and that creates revenue, and we have money available, and we can balance our budget that way. And then the largest scheme is this pension thing and the retiree health care, where they figured out long ago that if I offer the employees more compensation, more salaries, that's going to increase our expenses, our expenditures. I'm going to have to write a check for that. But if we promise pensions, I don't have to write a check today. That can be pushed off into the future. Now, they have started pre-funding it. They do. But they don't pre-fund it enough. So the legislature, instead of using what the actuaries say should be put into the pension to be properly funded, the legislature has come up with a pension funding scheme that funds less than that. But they still can say they balance their budget because they only write a check for the contribution. So in Illinois, their current budget, they're going to write a check for like $11 billion. But their actuaries say, well, to properly fund it, you actually need to write a check for almost $15 billion. They're off by $4 to $5 billion. Wow. So they're underfunding the pensions by $4 to $5 billion. But the governor says we balanced the budget. The media points out that they balanced the budget. And the citizens, you're busy, you're working, you don't have time to figure out, it takes me a long time to figure out, well, how much are they underfunding? I have to dig through paperwork to figure that out and look through actuarial schedules. People don't have time to do that. So they just have to trust what the governor and legislatures tell you. And then unfortunately, the media is not investigating that. No, it really is. Now, some of them have investigated this in the past. And I continue to point it out to them, and they're just like, "Oh, we've covered that in the past. We've dealt with." It's like, well, they're still doing it, and they're still not really balancing their budget. Quit saying that they're, even political organizations who know that they're not really balancing their budget will say yes, they are balancing their budget. It's like, no, they're not. So now, I did get a chance to go speak in Pierre, South Dakota. I went to a very exciting conference, Judy, called the Association of Government Accountants. And I went to speak to them, and I pointed out all these pension and budgeting schemes that Illinois does. And they're in financial trouble, but South Dakota isn't. So I thought, well, South Dakota's, it must just be Illinois has a poorly worded balanced budget requirement that they can kind of, circumvent.
Right.
So I was like, well, I'll look at South Dakota's. They must have a really good worded one, and we'll use that as a model.
Yeah.
And believe it or not, they were very similar.
Sure.
They were very similar. So I asked the audience, I said, I don't know the answer to this. You might know better than I do. You're, in the state government accountants. Why do you think that with very similar wording, Illinois has used budget shenanigans to get around that a balanced budget requirement, but South Dakota obviously hasn't? And the audience, the first answer was, we have honest people here. And the second one was, you guys have people who are corrupt.
Yep.
So
Yep. Illinois has been the springboard for a lot of different political actors at the federal level, right? They got their springboard in Illinois. So
now
that's
the only thing I was nervous about is, did I just teach the government accountants in South Dakota? I'm hoping that wasn't the case.
No, I think they'll still stay honest. That's what.
Did I just show them ways that they could circumvent their balanced budget requirement?
Well, this circles right back to the whole reason we started this, and we want people to read this article by Jim Naughton, and we hope to have him on an event I don't know, we'll do a Zoom event with him, hopefully. That all of this, if we could get the regulations to be more strict and not captured by the regulators, right, to their benefit, so much of this political theater that the political shenanigans and the mistrust in government that's happening wouldn't be able to happen, right? I mean, I think that
what Jim argues is maybe the SEC should step in. That the SEC, these governments issue bonds, and
right.
they're obviously, the accounting is flawed, what people are being told, and the SEC, they do have the power to say no. Like, for example, in 2013, again, a whole nother podcast, Judy. In 2013, Illinois, the SEC charged Illinois with securities fraud because Illinois was saying that they were funding their pension properly. And the SEC figured out that no, this funding scheme is a balloon payment on steroids. And the cease and desist order said that you need to stop in your bond offering saying that you are funding your pensions 90% over 50 years. That is just mathematically is impossible, and you need to stop saying that. After they made that cease and desist order, Illinois did cease saying that in their bond offering, but they continue to say it publicly. And they continue to use this political math and the way that they calculate these pension liabilities that are not what Jim calls, not relevant to economic reality.
Right.
So should the SEC, because these people, because investors are investing in these governments, and a lot of times people think that, wow, these governments have, are secure investments. Maybe the SEC should play a role.
Well, somebody needs to get involved, and it is sad that the response that we get of people just kind of turning a blind eye to it, and maybe it is because they're in their daily life, right? Everybody's busy, and talking about accounting and math sometimes is not enjoyable because people are having a hard time with their own finances. They're having a hard time balancing their own budget, figuring out what their own net worth is. So,
but that's why we exist,
Exactly why we exist.
That exists. So I would really urge our listeners to go to our truthandaccounting.org website, and then even more fun, go over to our data-z.org website. You can click on your own state. You can, and we provide the the true financial information, the financial state of Illinois, the financial state of whatever state you're living in. Also, you can do that for the 75 most populated cities. Or if you're, unhappy with where you're living, you can go there and create some charts on and try to figure out where would be a better place to be living. And again, everybody's busy, and so we spend the time to dig through the actuarial reports. We spend the time to go through the financial statements to provide the listeners with their government's true financial situation, so the people could be knowledgeable citizens. So I urge them, before they go vote, at least print out your government's financial state of whatever government you are from our website. And then obviously, this takes a lot of work to do. We need money to publicize things, to gather the data. And so if the listeners are so inclined, donations are really appreciated, and you can do that easily on the website.
Thank you for reminding people of that, because each press release we send out, that's $100. So but it touches millions of people. So every time we put out a report, we're educating people. And something a lot of people don't know, weekly we are contacted by concerned citizens across the United States who are seeking our help, who want to understand, who do want to learn. And so your dollars go to helping us educate these people that are actually putting pressure and watching their local governments. And we need people like that. We need to be holding, that's the whole part of this, constitutional republic, was we the people have to be involved. So like Sheila said, we are here to dig through so you guys can go have fun and do all the things that you're good at, because we're good at this. So but we need your support to make that happen. But I was really excited to have this conversation with you today, Sheila, and we are going to continue having more conversations. And contact us. You can, go to the truthandaccounting.org. You can find Sheila and my's all of our contact information on there. So if you want to reach out and have questions or need somebody to speak at an event or a conference, Sheila goes all over the country doing that. So we're here to make government work for you. So because if the government can't count, we can't count on the government.
That's right.
All right. Thanks, Sheila. Have a great day.